Hello. The company being analyzed today is Cash UR Drive Marketing Limited, company which does outdoor advertising for other companies. So it's an advertising company. Today, we're going to analyze the company's financials, what it actually does, and its future growth plans. So let us start. First, we have a market cap of 214 crores. So it's a very small company on the whole. Current price of one share is 121 rupees. Price to earnings ratio is 10.5 times, and book value per share, that is assets minus liabilities per share, is 67.7 rupees. Okay, 67.7 rupees. Oh, now here we have the profit and loss of the company in crores from fiscal year 2022 all the way to fiscal year 2025. You can see sales, you can see operating profit, and you can see at the very bottom net profit. So, fiscal year 2022, we have 82 crores of sales. 23, we have again 82 crores of sales. However, operating profit has improved from 1 crores all the way to 6 crores. So sales almost same, but big jump in operating profit. Then fiscal year 24, 94 crores of sales. And finally, fiscal year 25 was the big growth year with 139 crores of sales, 21 crores of EBITDA or operating profit. Same thing. We go to 23 crores of profit before tax. Why? Why is profit before tax higher than profit operating profit? Now take a look at this, because first of all, interest on loans is almost negligible. So the company has very low short-term plus long-term debt, very low long-term debt, and depreciation is almost zero. It's rounded off. It's almost zero, so we know it's not a very fixed asset heavy business, not a very capital intensive business. And there is some other income. Okay, 3 crores almost of other income fiscal year 25. Other income, for example, if the company has some deposits in the bank and earns an interest on those deposits, that will be classified under other income. So that led to 23 crores of profit before tax, and finally 18 crores of net profit rounded off fiscal year 25. You can see a massive jump off, double growth, almost doubling its net profit from fiscal year 24. This was 5 crores, 6xing net profit, almost 6xing net profit in the last few years alone, 4 years. Company at a glance. Cash UR Drive is a leading integrated outdoor advertising agency in India. So it's an advertising agency in India. Okay. It has established itself as a trusted partner for brands seeking impactful visibility out of home. OOH. This will be a term repeated again and again here. Okay. OOH, transit and digital advertising. So there are three types of advertising mentioned: out of home, transit, that are cars and all of that, and digital advertising. There's a pan India presence and has already conducted 5,000 plus campaigns. It's a pioneer in market leader in outdoor and transit advertising media. So, outdoor and transit. Okay, we will cover the transit. 1,800 plus advertisement rights for buses and e-buses. So 1,800 plus buses and e-buses where it can have advertisements of clients there. 290 plus EV charging stations. So there will be an EV charging station which will have the board or the advertising board of some client. 1 million plus cabs wrapped in metro cities. Wrapped in what? Wrapped in like the advertising campaigns of companies. 65 plus digital screens, again out of home. So digital out of home screens. And 250 plus public bicycle shelters across Delhi and Chandigarh. So the buses, e-buses, the cabs, it will come under transit advertising media. Okay. Companies can basically advertise in these locations, in these EV charging stations, all of that. So, business model and offerings. Where can they advertise for clients? First of all, transit media, 1,800 plus buses, we covered that. Digital screens, okay? LED screens, vertical pods, which are outside, these are outdoors. 90 plus digital OOH and vertical pods. TV and newspaper, traditional one, printing and broadcast campaigns, okay? Outdoor ATL and BTL, billboards, wall paintings, events, 361 out of home sites in Delhi. All right. ATL and BTL, they're basically, I guess, advertising terms. Above the line, below the line. Okay. End to end business solutions, end to end, starting to ending. It can plan the entire marketing strategy for companies. First of all, strategy and media planning. then it buys the media. Where will the thing be advertised? Creative innovation, campaign execution, sustainability, and green media revolution. So starting, that is from planning all the way to the execution, end-to-end handling of all the services. Now, this is a revenue mix. We will see where the revenue is coming from. Okay. Let's take a look at fiscal year 2025. This one. The blue one is outdoor media, generating 77.4 crores of revenue. Okay. Outdoor media. The orange one is transit media, which generated 51.8 crores. And you can see, okay, we will take a look into that. Then we have print media, 6.9 crores, and digital marketing, 3.2 crores. So we have two of the big segments. These two segments are outdoor media and transit media. And you can see in H1 fiscal year 26. What is H1? H1 basically means quarter one and quarter two, first half of the fiscal year. Okay. Transit media was a big revenue bringer, 34.9 crores, only slightly below outdoor media, which is a bigger revenue made income. Income revenue maker, the revenue maker. So largest revenue generator is outdoor media, followed by transit media. So these two are the very important for them. And as you can see, print media and digital marketing, they have seen a nice rise also. They're also rising, they're also growing. Okay, especially print media. See, 6.9 crores from 0 crores in fiscal year 23. Now, sector wise revenue. Government contributed 40% of revenue in fiscal year 2025 and private sector 59.06%. So at least for fiscal year 20, sorry, this was H1 fiscal year 26. Sorry, this is H1 fiscal year 26. Fiscal year 25, government still contributed 21% of revenues. And it seems that government campaigns, government clients are important. They are important for the company. Now, here we have geographical bifurcation of revenue. We will take a look at the gray one. Let us do for fiscal year 2025 first. So in fiscal year 25, Delhi contributed 27.24 crores, Uttar Pradesh 34 crores, then Maharashtra 15 crores, Haryana 11 crores, and all the other states, oh, 11.76% of revenue. Sorry, percentage. That is my fault. That is very much my fault. 27% of the revenues in fiscal year 25 came from Delhi, 34% of revenues came from Uttar Pradesh, 15% came from Maharashtra, 11% came from Haryana. So these four states are very important. Now, if we take a look at H1 fiscal year 26, which is the latest numbers, 46% of revenues came from Delhi, 22% revenues came from Uttar Pradesh, 12% came from Maharashtra, 6% came from Haryana. So very North India kind of. Okay. With Delhi and Uttar Pradesh, very much North India concentrated, with Maharashtra being one of the West Coast. And then we have Haryana, I guess, still in the north. Okay, so these four states are the very much important ones. Then we have exclusive media and trade media. These are the advertising models, and you can see the money made. Exclusive media and trade media. In fiscal year 25, trade media was the 112 crores one. Exclusive media was 26 crores. Okay, so what is the difference? Exclusive media is ideal for longer term campaigns and gives them full control, while trade media gives them flexible shorter term campaigns, but it's higher cost because they are intermediaries. It's a third party media space. Third party media space. Okay. Geographical footprint. We already covered this. This is state-wise fleet. Okay. The cabs and the buses. Where are the buses and cabs coming from? So it seems a lot from Punjab, a lot from Uttar Pradesh, substantial portion from Maharashtra also. Finally, some campaigns concluded in fiscal year 25 and H1 of fiscal year 26. Uniqlo, one of the clients, Centerfruit, we got Redbus, we got Flexibus. Oh, we got McDonald's and we got IKEA. Okay, fine. So these are the way cabs are used and buses are used for advertising. Then let's take a look at the balance sheet. We will take a look at the balance sheet from for as on September 2025. Latest we got September 25. So long-term borrowings are zero point 0.0 and I did not mention if this is in lakhs of crores. I don't see lakhs of crores. Okay, whatever the number is, long-term borrowings are very small. Trade payables, the money owed to suppliers, 28.91. Okay, so long-term borrowings are almost not there. Short-term borrowings, take a look, 0.09, extremely small. So trade payables are the big thing in liabilities, it seems. Then in the assets, property, plant, and equipment is again 0.83. All right. Non-current investments, these can mean like fixed deposits for more than a year. This can mean mutual funds, they have to hold more than a year, 23.92. Inventory is almost nothing. Investment, nothing. Trade receivables, the money their customers owe them, okay, 56.31. And cash and cash balance, 26.69. Short-term loans and advances. So not a lot of long-term borrowings, not a lot of fixed assets, not even a lot of inventory. Trade receivables, trade payables, cash, bank balance, and short-term loans. Okay, so very current asset heavy, not even a lot of current liabilities. Hmm. Then some key ratios. 44% return on equity fiscal year 25. That is a very good return on equity. 41% return on capital employed for fiscal year 25. That is again a very good return on capital employed figure. Net profit margin rapidly rising from 6.5% to 12.8%. Current ratio being a higher or lower. Debt to equity declined from zero point 0.4 times to 0 times fiscal year 25. Current ratio rising or falling does not matter. It depends on the industry. It depends on industry. Strategic roadmap and growth priorities. How are they expecting to grow? First of all, they're securing long-term media rights. Okay, they're setting up their own in-house printing facility, which I think should give them better costs. Yeah, see, they're planning to set up in-house unit to cut costs and improve turnaround. Then they're expanding the existing service portfolios. Okay, expanding from transit, print, and outdoor media into EV charging and battery swapping stations. Okay, so they're expanding into more and more areas, securing long-term rights, making their own printing facility, and of course, technology-led efficiency, like investing in automation for campaign monitoring, media planning, and inventory. All right, making use of technology, fine. Then EV charging advertising synergies. Charging stations in India are expected to grow rapidly. So these are in thousands. In 2025, we have 593,000 stations, charging stations, expected to increase to 2,507,000 charging stations. So massive growth in charging, EV charging stations. And basically, more are the charging stations, the more places they can actually campaign. So that's a good thing. Okay, more so kind of market is growing for them. Market is growing for them. And then the H1 fiscal year 26 highlights. So quarter one and quarter two of fiscal year 26, how well did that do? Revenue rose from 63.6 crores in the H1 of fiscal year 25 to 77.9 crores. They made 13.55 crores of EBITDA. They made 10.88 crores of profit after tax in H1 alone, the 14% profit after tax margin. But earnings per share declined even despite higher profits, which means they must have issued more shares. That's why the earnings per share declined. Now, conference call analysis. So, first of all, working capital days of 120 days, working capital cycle. And the management here mentions this. We are in a very asset light model. We are not into a very capex heavy model. We are into a working capital model where we buy the inventory in bulk and then we sell it. The balance sheet didn't have any inventory. So we don't have any capex model at all. So it's an asset light model, but a working capital intensive model. Now, here's a question asked by an analyst, and Mr. Raghu Khanna, he's from the company. He is going to answer. So the first question is, with increasing focus on your green and EV linked advertising, what percentage of total revenues today comes from sustainable or EV media formats? Answer. EV media formats is part of the exclusive media format. This year, it has grown to 30%. Earlier in fiscal year 25, it was 25% of total revenue. Now it's 30% this year with the exclusive media. And out of that, there will be around 22%, which is therefore EV media only, which are the electrical buses and EV charging stations. So the EV media formats are now 22% of revenue in H1 of fiscal year 26. 22%. They're a part of exclusive media. Okay, I guess exclusive media kind of means you can have their exclusive, only you can advertise kind of. So on a Bus, you will be the one advertising. Now, uh, this is not confirming their future growth rate, their future planned growth rate, but it's a bit interesting. So, Mr. Ankur Agarwal, person asked a question to the management. You projected almost approximately 40% CAGR, if I'm not wrong. So, like, do you think that's something that you know we are aiming at and it's looking there's visibility into it? So he asked this question, and he said you projected almost 40% CAGR, but the person didn't dispute it. So maybe 40% is what they're looking to grow. But let's the answer. We're trying our level best to catalyze the whole growth with the funds and internal accrual what we have. So funds and internal accrual. So outside funds and internal cash flows. We have shown consistent growth in the past, and I will ensure that with the funds and with the blessings of the shareholders, we'll be capitalizing and doing a better thing what we have done in the past. So whatever growth they have done in the past, they're hoping to now grow even faster. And one thing, look at this. Considering the working capital cycle of 120 days, to do an incremental sale of let's say 300 crores from the present level, you will require around 100 crores of working capital. Is that assessment correct? Very correct. So, with a working capital cycle of 120 days, in order to only increase revenues by 300 CR, they will need 100 crores of working capital, almost one third, actually exactly one third. So it seems very working capital intensive. This question mentioned 40% CAGR. They did not exactly dispute it. They said they will use internal cash flows and some funds to show consistent growth. And whatever they had done in the past, they want to improve on that. So at least they said that whatever growth they have done in the past, whatever growth rate they have grown in the past, they want to do a better thing. So that is it. That is Cash UR Drive Marketing Limited. Very high returns on equity and capital employed, pretty working capital intensive model, so not the best cash flows. Yeah, outdoor advertising still a good thing, big thing.